Hi guys, I'm Harry Yotis. I've been a trader professionally for the past 20 years. I started my career in 2005 working for a big bank here in Canada, and for the past 10 years I've been trading my own account. So let's get started with today's daily market update. Today being Monday, December 22nd, this candle right here on a chart of the S&P 500 daily chart. Okay. So, bid. After Friday's OPEX, we are bid and the market is positive today. So the big question is, why is the market up today? Well, it's actually fairly simple. We'll get to it soon. But first, let's talk about the technical picture like we always do. Okay. To me, this is bullish. We're continuing our bullish trend from Friday. Let's bring in some of the simple moving averages here. The red line is the 50, the 100, and the 200, all upward sloping, perfectly aligned one above the other. And we are above the 50, so we are bullish. Okay, the trend is bullish. We haven't broken anything. This continues to grow. Okay, and this big yellow sun up here is what I forecasted would be the final price for December 31st, let's say, of 2025, between 700 and 720. Okay, but that's not important. It doesn't really matter if it gets there. The point is that we are bullish, trading above the 50. We are approaching this double top to break, because as the market was going down, people were anticipating it was a double top, a close below the 50, and everybody was selling puts like we mentioned. But on Friday, all of those puts got destroyed, and all of the calls that were bought here were destroyed. So it's like we're starting anew, starting fresh. Nothing really to destroy this market so far. Okay, so technical picture is bullish. We pair that, our technicals, with the sentiment analysis. Let's get rid of these moving averages so you can see clearer. Okay, the sentiment is now neutral to greed, right on the border. We just entered greed territory for the first time in what seems like forever. Okay, so the tide is turning in sentiment. We have the market momentum is neutral, a couple of greed on the strength. The breadth is not there yet. Look, the put-call ratio is still not extreme fear, but that should probably go down to neutral because it's a 5-day average. So still plenty of room to go higher. As we posited before a long time ago, we're probably going to get into the greed and hopefully into the extreme greed. And it stays there for 2, 3, 4 weeks. That will be amazing. Okay? But that'll be amazing for the bulls. But that will be when we will be looking to not be bullish. Okay? But as of right now, we are still bullish, and the sentiment is still neutral enough or low enough for the bull market to continue. So again, why is the market up today? And the simple answer is no more bad news. It's that simple. We kept having a lot of bad news. People kept buying a lot of puts, and it kept a lid on this market. Okay, but once Friday came and the market makers destroyed both call buyers here and put buyers there, with a record trillions of dollars of puts and calls had to expire worthless. Once that happened, the weight is just lifted off the market's shoulder, and now the market will revert to the positive drift asset that it is. Because when there is no news, all you have is just passive flows coming into the market. So that's what you're going to get. And you also have, I guess, a Santa Claus, right? People are happy before Christmas, whatever. But the point is that because there's no bad news, you're going to have this move up. And we're still not really at exuberant levels in any kind of sentiment. And if we break above the highs here, you don't short this market. It's going to continue to go higher, maybe another, 5%. 10%, we don't know. So we are still bullish, and we are taking advantage of the fact that the S&P 500 is a positive drift asset, and it will continue to go higher when there is no lid on it. Okay, that's it. It is that simple. Okay, so let's talk about the AI trade, because we've had a lot of news recently about how the AI trade is going to go down, the bubble is bursting. Yet today we're getting news like here from Zero Hedge. We had Georgia Power gets green light to dramatically grow the grid to draw data centers. You're having this kind of news coming out right now. Whereas before you would have news that the AI bubble is bursting and there's too many data centers. Okay, now the narrative is starting to switch, and that everybody is starting to need even more power than they anticipated. So maybe there is no glut in power centers. Okay, so you see how the narrative changes when price action changes. Okay, the news follows the price action almost. So what you should be looking at is the fundamental drivers and not the day-to-day news. So let's go to the AI stocks. Of course, the darling of the AI trade is NVIDIA, and we said that it's stuck within this sideways consolidation range. And this is Monday the 22nd. It's getting ready to break up above this psychological, or like not psychological, but real 183.50-ish level. Once it does, I think it revisits the highs. Okay, so NVIDIA looking good. Nothing really rolled over. It just went back down to a neutral stance, waiting for it to get back into the bullish stance. Okay, we also have Google. Let's look at all the big tech. Google never violated. This is still a series of higher lows and higher highs. You want to be in it. Okay, so no problem there. What about Meta? Meta took a hit after, Meta took a hit on earnings here on the 29th of October because it had a one-time charge that really took a hit. But look, it's still maintaining these highs. It's still around a neutral level, just like what we just saw at NVIDIA. And I think it covers this gap. Eventually, as the market goes up, I think it goes to the 650 gap right here. Okay, so nothing really dead here. What about Apple? Not really an AI guy, but Apple's still doing highs. Like even the Mag 7 is still doing well. Okay, Tesla, another Mag 7 stock at highs. Okay, nothing to fear here. So where is the problem? Where is the worry? Where was this extreme fear that we witnessed in the S&P 500 when we went down? When we went down like 5% this past November? Nowhere. Okay, so I think the AI trade is back. We're not going to die. Mag 7 is not going to die. So everything is holding up and will probably continue to hold up for at least to the end of the year and maybe into January, which is what I say, which is what I think is going to happen. We're going to continue this upward momentum going into January and probably the first quarter of 2026. If you saw my forecast video yesterday, that is my prediction. Okay, so the big news of the day, another big development, is what I was looking for a while, gold. Okay, I finally got this breakout today. Gold is up 2.5% into highs, breaking out into highs solidly. Okay, slow creep up, as I was saying, very stealthily, very quiet. And then boom, today it finally actually happened. So the trade that I have the most conviction in and I am the heaviest in for the past 2 years is finally playing out, okay? Because silver, we already saw this massive breakout here on the 28th of November, and boom, no comeback. Okay, it's at $69 right now, almost 69. Okay, the breakout level was the 54-ish level, 69. This is a huge move, and that's what I was saying before for gold. I expect this gold move to have a similar move with silver. So, like more green soldiers coming, maybe all the way up to 4,800, maybe 5,000. I think we get to that just like we did with silver. Okay, this silver move is on fire. And of course, let's look at our trade that nobody talks about, the platinum trade. And again, another 4. A break above this high. Let's mark it. A break above these highs, or you can even go to the let's move it down to the closing prices. I like that better. Look at that. 1, 2, 3, 4, 5, 8 days. 8 days of massive gains. Okay, all of these precious metals trades are doing well, and that's why I think you have massive moves in platinum, massive moves in silver. This is why I think gold, after today's break, will have this another like 3, 4, 5 green soldiers. That's why I anticipate going forward. Okay, which could bring it to the $48,000 to $5,000 range. So, guys, let's recap. SPY, when there is nothing left in this market, when all the bad news and the weight is lifted from this options expiry on Friday, record options expiry, the market goes up. It takes its natural tendency to climb. it's a positive drift asset. I think this double top is in danger of being broken, and the bears here that were caught underneath, going short underneath the 50-day moving average close, thinking that a double top is in place, they got killed, and I think they're going to continue to get killed. Okay, so especially when you have new highs, you're going to have the CTAs and all of these momentum-driven funds going long, and you're going to get a push even higher. So market looking good. The AI darling trade, NVIDIA, starting to, I think it breaks out above this 184 level after consolidating for a long time, breaking out, but then coming back into the consolidation zone, and probably will go higher. Meta, I think Meta covers the gap from 660 to like 750 going forward. It'll be driven with the market. Google, stay long if you're in it. I'm not. Okay. Microsoft, forgot about this one. Microsoft consolidating. We're still holding our long here. I think it breaks out. This is a nice consolidation period, waiting for it to break out higher. It's all pretty much the same pattern. It's either a consolidation pattern for the AI stocks waiting to break out, or they never really went down. They maintained their bullish series of higher highs and higher lows. Okay, and of course gold, loving it, waiting for gold after today's breakout to behave like silver. This breakout, 1, 2, 3 weeks of massive gains. And platinum, loving it, 7 weeks of gains. Okay, so that's it, guys. I hope you enjoyed today's video. If you like what you saw, of course, like and subscribe, and leave your comments below. I'll be more than happy to answer them. So looking forward to to tomorrow and this week's shortened trading period, because it is Christmas. So Merry Christmas to you all, and looking forward to more gains coming forward later.